I recently came across this investing story that I really enjoyed reading, and it's called the Coca Cola Millionaires of Quincy, Florida. But before we get into the story, if you're new here and you never see my channel, my name's Elliot, and I upload videos about investing, the stock market, and I do updates on my own portfolio, which is on the Robinhood app. So if that's something you enjoy, give the video a like, subscribe, and let's jump right into it. So my phone should be coming up right about now. And the story goes, type Quincy, Florida into your search engine. The first page that pops up will likely be a standard Wikipedia entry that many towns across the developed world now have. When you run through it, Quincy probably won't strike you as a particularly special town. It looks nice enough, but with a population of just under 7,000 people, it seems on the face of it to just look like any other small town dotted across the American South. This town, however, isn't just any other small town. It has a fascinating backstory, one that is summed up in a few lines if you make it through that Wikipedia page. Quincy has made many of its residents rich, and it's all due to one of the most recognizable names in the world, the Coca Cola Company. I've actually read a couple variations of the Quincy story, but they both revolve around a local banker by the name of Mark Welch Munroe, commonly known as Pat Munroe. Bear in mind that this was in the 1920s, so Coca-Cola had been public for a few short years at this point. Anyway, the stock had dipped due to a legal case with the company's bottlers, and this was followed by a collapse in world sugar prices that left Coke holding contracts worth millions of dollars for overpriced sugar. According to one version of the story, Quincy's tobacco farmers hit a record crop haul around this time. Munroe then persuaded them to invest in the resultant windfall into the Coca-Cola stock. They held on to these shares, never selling, and the rest is history. According to this version, which dates back to an article from 1997, the current holding would now stand at 15 million shares once you account for the many stock splits over the years. The implied market value is around $690 million. Other versions merely state that Munroe would tell his customers to buy the stock, such as his belief in the strength of the business. He would even lend them money to do so. Quincy's residents kept buying the Coca-Cola dividends, went on to protect the entire town through the Great Depression. Dozens of millionaires were created in the process, and Quincy even became the richest per capita town in the United States at one point. And it was all thanks to holding the shares of one of the best businesses known to mankind. In later years, Coke dividends would protect many of the town's residents during localized recessions and depressions. So, what could have made those Quincy's residents so confident with their Coca-Cola holding? Well, in 1929, the year of the Wall Street crash, Coca-Cola managed to earn just over $10 per share in net income. The company earnings took a hit during the onslaught of the Great Depression, but they remained largely intact. By 1933, and despite the worst financial crisis in modern history, the firm was still able to earn well over $8 per share and generate a 20% return on equity. Remember, the economic environment at the time had ravaged stocks left, right, and center. Unemployment had exploded and corporate earnings collapsed. Deflation was rampant, yet Coca-Cola kept on chugging along. A dividend payment of $4.90 per share in 1929 went on to increase to $6 a share 4 years later. How many stocks can boost a record of increasing their dividends during a depression years? I'd wager not many. Adjusted for stock splits, the value of a single Coke share bought in the 1919 IPO is now over $10 million. Now, that figure does not include the effect of reinvesting dividends. If you assume dividends were not reinvested, a single share would be worth over $400,000 at time of writing. Adjusted for stock splits, it would have morphed into 9,200 shares, churning out over $3,000 in dividend cash every quarter. It represents astonishing passive income for those Quincy residents who handed the shares down to their heirs. Even more so when you consider that this is all just from one single share. Had they picked up 50 shares in 1919 and held on to them, their descendants would be currently enjoying dividend income of $150,000 per quarter. Assuming reinvested dividends, the lump sum alone would be worth $500 million. The competitive advantages of Coke are nearly impossible to erase. It would take an astonishing turn of events to destroy what has been built up over the past century. Coca Cola stock dropped to 8 earnings during the worst year of the Great Depression. Its earnings had taken a 20% hit, but the business never once made a loss during the worst crisis in modern economic history. The market has long since caught on to the strength and durability of Coca Cola's earnings. That explains why it barely dropped to 16 earnings during the last financial crisis. As long as the underlying business remains intact, the Quincy residents never had any reason to sell the stock. It remains a perfect example of the effects of time, value, and quality profits working together to create vast sums of wealth. So a few reasons why I like this story is one, it shows how powerful long-term investing can be, especially when you let compound interest kind of kick in and do its thing. My favorite thing about this story is that usually when you read stories like this, it's about one person who will make an investment and they do really well. But this story is about a town that all they did was invest in a company that they were familiar with and that they were probably consumers of. They held them investments for the long term, and it helped them get through some really tough financial times. And the most important thing to take away from this story is that you can do this too. You can invest in the companies that you're familiar with and that you're a consumer of, hold them for the long term, and you can see massive returns as well. Even today, Coca Cola is a great stock to invest in. It's one that I hold in my current portfolio. And if you're kind of curious about what I invest in, I'll make sure to link my portfolio at the end of this video. So if you enjoyed this video, please give it a like, subscribe, and we'll see you next time.